The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let's make some money. Before I get started today, or this morning, I want to thank Brother Charles Gilmore 3. I guess that means the third. Thank you for contributing to support my efforts here, and it's really appreciated because there's so much more I want to do, and those contributions help make this more of a priority because it takes me away from actual trading to do these videos. But it's important that we don't lose money as a race. Basically, we don't have to go down with the ship. We can actually profit and change our status as bottom feeders on the economic scale. That's insulting. We can do better. We must do better. Anyway, back to trading. We're talking about the US dollar. The reason I have not been addressing the dollar in most of my videos is because it's been kind of languishing, hasn't really broken out, or had not until recently broken out. Now it's worthy of discussion, and it's on. It's on. You see before you a monthly chart of the Forex symbol, dollar versus Swiss franc. Okay. And here's the low here at 2011. You may recall, or you'll see later, that this low in the dollar corresponds with the high in gold at 2011, and oil had a high at 2008, I believe. And so gold is pretty much, it moved the low here in 2011. Then there was a high here in December of 2016. Yeah, that was the high. And we just hit the low in February of this year. Okay, so we got an A, B, and C. Now what you also see here is a triangle. Let's see. I got all these lines here. So before we get to the triangle, we got this stochastic here. We're about to cross and go positive. On the monthly chart, the price will move before this thing crosses because these charts the monthly chart does what it says. It updates every month. So, it's kind of really fuzzy math on the monthly, but we're right here at the 20 line on the scale, and the 20 is the beginning of being considered oversold. Okay, so it's a good time. Let's see. I'll look at it on the weekly. This is where I want to be anyway. The weekly chart, we have crossed on the stochastics. We're clearly in an uptrend. Anybody betting against the dollar during this uptrend, which is going to come all the way back up to oversold state, they're gonna lose big. Strong dollar is bad for gold and oil. So energy and metals. By metals, I mean precious metals, I mean steel, aluminum, all the good stuff. Silver, copper, yada yada yada. Palladium, it's a big complex, and a strong dollar is going to be negative. Try not to be over dramatic saying deadly, but it's going to be pretty disastrous for it, because this dollar, in my view, working for my big thesis, the dollar has a long way to go, a long way higher to go. Okay, so at this top line, we have the triangle here, the top edge of the triangle, and this bottom black line starting from that 2011 low, and we're going and this downtrend, the dollar starting December 2016, this high right here, December 2016, what is that, about 15 months ago, we will take this out. No doubt about it. You could take that to Vegas. This is dead. We're going through it. Okay. Now, we had an A, B, C pattern. The C pattern, I have black lines showing the channel, downward channel for the C pattern. We broke it. Here we go. It's on. Now the rest of this, I'm just going to kind of speed through the rest of the complex to show you what the metals and oil looks like, and maybe point out a few symbols not maybe, but point out a few symbols where you can profit from this. If you're getting anything out of this, making any money on it, if you're learning anything from these videos, hit like. I need the like. Hit subscribe. And most of all, hit that alarm button so that you will get the alert in a timely fashion. And if I'm dragging a little bit, it's 7 o'clock Eastern time for me. I wanted to get this video out to you before the market opens, so that's why I'm kind of dragging a little bit. It's early. It's 7, and I was up looking at these charts for a while before actually starting this video. So there you go. Oh, and also there is a paste for my PayPal link. Okay, moving on. We got gold versus the US dollar. We're looking at a quarterly chart. You see that we're almost oversold. I'm sorry, overbought the quarterly chart. Here's that 2011 high. The stochastic is showing us A, B. We're going to flip this and come down to a C. Now, again, this is a quarterly chart. If the monthly chart takes a long time to show a crossover, then a quarterly chart is going to take even longer. So I don't wait for this to cross. I use the stochastic to help me do the wave count, because that's the criticism of Elliott wave theory. People debate over what the wave count is, and this is one quick way that I mitigate that problem, that confusion about what the actual wave count is. I will be doing more videos in the coming days specifically about Elliott wave theory to catch people up on that. I've been kind of talking around it without really addressing it directly. But here we go. Let me go in a little bit so I can show you the triangle on gold. The theme of today is triangles. They're everywhere. All of these symbols have these triangles. Okay, so we talked about the dollar triangle, but here's gold. It's in a this particular triangle pattern is called an ascending wedge. So you got this support here. Got the low for gold was in December of 2015. Remember that beginning of the B wave on the dollar was in January of 2016. So they're only about a month apart between the high in the dollar and the low in gold. And gold has been running up since then, and we're going to come lower. I believe we're going to come almost take this out. We're not quite going to do it, and we're going to bounce up and then come down to like the $900 level. So from this point, when we break out of this ascending triangle, I believe we're going to make an ABC pattern, because that's the rule in Elliott wave theory. The retraces or counter trend movements are ABC patterns, and I don't count the part in the triangle as AB, because this is essentially a sideways move. Okay, I make a diagonal channel and count my waves within the channel, so this doesn't count. We're going to end up with a B, C. Okay, so that's really all I wanted to point your attention to. Oh, and we're looking at a monthly chart here, and it is about to cross, but you see it's already falling. So when this breaks, it's going to fall fast. So I want to call your attention to the Bitcoin video I did recently. There was a triangle there too, and I said that Bitcoin, and it was one just like this, an ascending triangle. Okay, and I said then that Bitcoin was going to break through the bottom of that triangle most of the time, not all of the time. Most of the time, the ascending triangle, the price breaks towards the ascending line. So there's a converse to this called a descending triangle. So basically, the diagonal line, whether it's ascending or descending, based on whichever triangle you're talking about, that's the direction the price breaks out. The actual rule is the ascending and descending triangle. They are continuation signals or patterns. It means that the price will continue in the direction it was moving before the triangle formation. Okay, in this case, the price was moving down, so that means when we break out of the triangle, we will be moving down. I said that about Bitcoin, and it was true. I'm saying it now. Let's see if it's true again. Now, I think that's all needed to be said about gold. So I'm just putting you in a position to decide if you want to take an action. If it were me, I would be taking an action. I'm not in this particular symbol. I am in this symbol. A risky, dangerous piece of crap. The ugliest symbol in the history of ETFs. I'll show you why at the end of it. I don't want to mess the chart up right quite yet. But this is an ETF called Dust, as in gold dust. It's a bearish ETF, a triple leverage ETF. It goes up when gold goes down. It's supposed to. Now, like I said before, they don't always do what they're supposed to do. And this one is a perfect example of that. I'll show you after I make my point about this triangle we see here. Now, this is a more or less a symmetrical triangle. Okay, with the ascending triangle we saw in the other symbol, the top line was more or less parallel, more or less horizontal. It wasn't exactly horizontal. It was slightly sloped. Okay, how much of a slope makes it a symmetrical versus ascending and descending? Well, if it's a judgment call. If it's substantially equilateral, then or symmetrical, then that's obvious. That's what it is. To my view, in my opinion, you may disagree. I believe that this is symmetrical, essentially. Okay, could be that I'm rationalizing. Could be that I'm just saying it because I want it to go higher. Okay, so time will tell. Let's go out and look at a bigger view so you can see this crappy ETF that doesn't always obey. Okay, I'm gonna have to take this line off. It's messing up my chart. Let's see, let me do this. I'll just throw it away. Yeah, I can throw it away. Okay. Gotta go even bigger. Okay. This piece of garbage, it started rising when gold started falling in 2011. Let's see, somewhere in here. You can see it actually even went down before it started going up. Now, gold had already started falling in 2011. So, therefore, DUST should never have made a new low. So, this is actually DUST tracks gold miners as opposed to gold itself. Just a technicality, but even if I compare it against the gold miner index, it didn't even mirror that properly. Okay, so as gold continued to fall, and even as gold miners continued to fall, there was a period when it did what it was supposed to do. So it moved from about, in this case, let's say roughly $600, roughly 570, somewhere like that, 570 or whatever, and then it rose to $4,100. So the point is, it it obeyed for a good while before it became aberrant. Okay, so to move from 560 or 570 to $4,000, that's not a bad move. Now, knowing that gold was going to continue to fall, the thinking is that this crap would continue to rise. It didn't. Now, fortunately, I'm looking at a weekly chart. You look at this stochastic. Well, you got one move. Let me look at it on a monthly and see what the stochastic did. Because these dangerous ETFs, I will definitely be putting a trend line on them. I will not play around with these. I'll be using every oscillator I can think of to know when to get out. Okay. Now, now I'm looking at a monthly. At least on the monthly chart, if anyone was watching the monthly stochastic, and I think I'm going to do that this time too. Between the weekly and the monthly, go back and forth and follow the stochastic along with trend lines and other techniques. You got one movement from oversold to overbought before it freaked out and never returned. Why did it do that? I don't know. My guess is that they're buying a lot of put options. And what people normally do when they buy puts, they buy it as protection against their portfolio. They buy the put as protection against their portfolio if they think that the market is in a short-term downtrend. That basically they're still thinking that people are going to buy the dips. So instead of selling, they'll buy either the put option or they'll buy a symbol like this, DUST, to make money while they're holding in gold miners, or gold is losing money. So that's the thinking. But somewhere along the way, they figure out that this time is different. The downturn is serious. It's not a buy the dip scenario, and instead they sell their principal position in the thing. In this case, is gold miners, and therefore they no longer need to buy puts. And so this is just my theory. I believe that's what makes these these triple leverage ETFs no longer perform well, because there's really nothing. It's hard to buy puts at that. The market for puts dries up once once people who are using puts as hedges against their primary position are no longer interested in puts. So I'm going to have to test that theory by looking at studying some volume as it relates to these triple leverage ETFs. Let's see what happens with the volume when at this point in time versus other periods, and then see with other ETFs as well. But anyway, this crap is done. It's already rising on the monthly stochastic, and we had a breakout on the. Let's show you what's so good about this symbol. Why I'm excited about this garbage. I'm excited about this garbage because it had a double bottom. I want to show you. That's a very you can any term I use. Please go to investopedia.com. Look it up. Be familiar with that site. That's my favorite site. I can attribute most of what I learned to that site over any and everything else, even over YouTube. Okay, now. Leg 1 of the downturn. Look at the box, the information box. The low says 1901. The information box on the right of the screen. The low says 1901. And that low was September the 7th, 2017. 1901. Then, wow, hold on. We are looking on a daily chart. On January 24th of this year, it went down to 1904. On January 25th of this year, it revisited 1904, 3 pennies away from the 1901 low. That is called a double bottom. The high between the two lows is called the neckline. So everybody that knows technical analysis saw these two lows on this piece of garbage symbol. Everybody's looking at this, and they're looking at this neckline here. They have their computers set up to give them an alarm signal when DUST crosses, in this case, 3198. When that happens, that alarm is going to go off. That's called a breakout. And Wall Street's going to pile into this. And gold will have broken out of that triangle at that time. And so the money leaving gold is going to end up here. Okay? This is my opinion. We'll see how it goes. But I'm right. I'm right. Okay. Says the Aries. I am right. Headstrong, rarely wrong. Okay? It is what it is. All right. Let's see. I want to go back down to my intraday. And what was it? I think I had a 16-minute, I think. It's another reason why I like this barchart.com. You can do increments, any kind of increment you want, just about. And, this is with the free version. trading view, unless you're subscribing, you're limited in terms of what you can do. I guess there's really no need to go any further on this particular chart. I think I'm gonna move on. Let me just see something real quick, because I showed you the triangle. And yeah, so we had our low here. We broke out of it. We got the triangle. It's symmetrical, and we're going higher. I'm not worried about these little overbought states on a 60-minute chart. Why? Because I'm not a day trader. If I was a day trader, I would be playing these moves, like this move, that move. I'd be worrying about all this stuff. I'm trying to get this breakout. I'm trying to ride this for the long haul. The reason why is because with these types of ETFs, when you're talking about these breakout situations, the price starts moving real fast. I'm talking about 15 and 20 and 25% in a day, each day. It'll move faster than you can catch it. So, for me, I like to sit and get all the money and polish my charting skills waiting on the breakout. Okay, now I'm just going to move on. Okay, now we're looking at oil. Oil is a sucker for dollar moves too. It's moves opposite the dollar. And this is the high in oil we're looking at. We're looking at a monthly chart, and this high was, I'm reading in the information box on the right of the screen. It's July 2008. That was the high in oil. Okay, and this is the U.S. oil fund. There are many symbols for oil that basically serve as a proxy for oil. This is a good one. There are many others. I have this A here is my markings for the Elliott wave ABC retrace. Again, counter moves in Elliott wave theory are ABC patterns. This is the A. This is the B. We've been in the C wave, started in May of 2011. We're still in it. Just like before, I mean here, if I was to put a line here to here and draw one along the bottom, you'd have a triangle again. And what did it do? Break out. All right, and this is the part that I count A, B, C. That's the way I count that. We're looking at the monthly chart. We got a crossover on the stochastic. Any bet against a powerful move like this with the ABC pattern looking like we're clearly in progress, that's a foolish bet. Okay. Everybody knows this. Wall Street knows this, and you're going to hear more news about it after oil breaks through a particular critical level. Let me try to show you what's going on closer here. So yeah, it's just high enough here for people to still think this is under, that we're going higher. But this rise started, I'm looking at the weekly chart, in mid-December of 2017. When we make a lower low right here, that's going to freak everybody out. And we see the stochastic is telling us we're going down. But because I'm showing you all this, anybody wanting to short this will already have taken their position. You don't need to respond to what they're doing on TV. Okay, you're as a technical trader, that's just entertainment for you. You don't look to them for information. You got your own way of figuring it out, and the news cycle will actually fuel the drop. So I look at them as the public relations firm of the 1%, and the media is the public relations firm of the 1%. And when this oil starts to fall, the media will increase the panic, and people are going to bail. Moving on. So how do you make money off of the decline in oil? Okay, DUST is how you make the money in gold. Here is a symbol, and there are many. DRIP, DURP. It's oil and gas exploration. Technically, it's it's a fund. It's a collection of stocks that it's a short on a collection of stocks that drill for oil. In general, that's what it is. I'm looking at a monthly chart. This is since 2016. Now, this fund or this symbol, DURP, it's not old enough. It hasn't been around. It wasn't around in 2011. So I don't have data going back that far. So the biggest peak I have, because the fund wasn't around, it's from January 2016. What does that sound like? Remember that that triangle for gold. The gold had a triangle that started around 2016, January of 2016. No. I'm sorry. It was oil. I think it was. I'm sorry. It was the dollar. God, wake up. It was the dollar. The dollar had stopped gaining strength around this. No, the dollar was gaining strength in this. Whoa, get it? See how confusing this is? Remember, this is a bear fund. So this goes down when oil is going up. So basically, the bear fund moves in the same direction as the US dollar. That's what's freaking me out looking at this. Because I'm thinking one thing and knowing I'm looking at oil fund, but I have to remember this being a bear fund, this moves in the same direction as the dollar. So the dollar has started losing energy, strength, and was starting declining in January 2016, and then December 2015, somewhere right in there. And gold was doing the same. And so gold started rising at that period. So it corresponds. We're looking at a monthly chart. The stochastic is showing strength. For you volume watchers, again, this is a monthly chart. The highest bar in this entire screen that we're looking at, this much information goes back to May 2015. The biggest bar on this chart corresponds with the low. And the low happened in January of this year. And you see all that buying energy, that pessimism, buying this bear market ETF, which is betting against oil. So not only is it my opinion, there's money right here backing it up. Okay? Now, the news isn't going to tell you that part until the price really starts moving. That's why you don't watch the news to get your opinion, to make your opinion. Okay? So, we also have here a trend line, broke the trend line, and what I put here is we have what's also called a reverse head and shoulders pattern. Look it up on investopedia.com. I will put the link below the video. And what it is, what a head and shoulders is, a reverse head and shoulders is, it's like someone standing on their head. Okay, so this would be the price bottom. That's the head. This is the left shoulder. This is the right shoulder. And what we look for in a reverse head and shoulder is in this case, the right shoulder should have a higher low than the left shoulder. That's one. Okay, so let's look at the left shoulder and look at the box in the upper left. 1135 is the low for the left shoulder. Okay, the right shoulder, 1143. All right. Now, once you see that going on, with the price movement, you look to the high involving in between these involving these three candlesticks in this case. If I was on the daily chart, it would be whatever the highest point is in that range between the low and the high. In this case, it's the left shoulder. The left shoulder high is 1575. The candlestick here, this monthly candlestick, broke above it. So that confirms that we had a head and shoulder, had a breakout. Okay. So I can put a trend line here from bottom to here, and it holds. It's hard to see this with the white. Yeah, couldn't see that. You can just imagine the trend line there. It's not worth really putting it at this point because it's not gonna be relevant. Why is it not gonna be relevant? Because this thing is gonna move so high, it won't even hit this trend line. This thing's gonna really spike, big time. So let's see. Now, how high will it go before it starts to become aberrant? We don't know. So you gotta watch this stuff. This high, I have the peak on this chart is January 2016. I told you that corresponds with the dollar reversal, which the dollar turned negative, which allowed gold and oil to rise. The price high here is $241. We're sitting around $14 right now, 14 and change. I believe we're going to come near this 241. I do not believe we're going to take it out. And I believe the entire move up to the near 241 is going to be an A wave. So we're going to do an ABC pattern going higher. And the A leg of it is going to get us near 241. I don't believe we're going to go over that. We'll see. And within the A leg, there will be an ABC pattern. Then we're going to have a retrace and go higher. In the neighborhood, maybe 390. We'll see. As we get closer, I'll be able to use the extension tool, Fibonacci extension tool, and get a clearer target. But roughly, that's where it is. And because I am not a day trader, I will wait and let this fill itself in as it starts to make the ABC pattern within this move all the way up to 241. I won't even try to get out during the B wave of it. I'll eat that little paper loss and keep riding it out because I want all of this money. If I was investing in this, I would want all of it. Okay, I'm not in this symbol. I'm in DUST. I'm in that garbage. Okay, but I'm gonna kill it. I'm gonna get it. I'm gonna get it good. Okay, so I'm gonna ride this out up to 241. That will be over 1,000% right there. And you got your volume here telling you that there's support in the market for the idea that this thing is going higher. I believe that's all I got. Yep, that's all I got. Like, comment, subscribe, hit the alarm button, and if you're feeling generous, appreciative, profitable, enriched in any way, paste the PayPal link. Because Dollar Will is a capitalist. See you next time.